Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning, this is Peter Lewis welcoming you to a rare leap year Money Talk on Thursday the 29th of February. It's our extra leap year day. It's also a budget special on Money Talk this morning. We're going to analyse Financial Secretary Paul Chan's 2024 budget with our panel of guests very shortly. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, Hong Kong Financial Secretary Paul Chan looked to plug holes in his budget in his 2024 revenue and spending announcements yesterday. The current fiscal year's budget deficit is set to soar above 100 billion Hong Kong dollars due to slower than expected economic growth in Hong Kong and lower than expected revenue from land premium and stamp duty. In his budget speech, Mr. Chan forecast a consolidated deficit of 101.6 billion Hong Kong dollars for this financial year, almost double the estimate laid out a year ago. Among the most notable budget measures announced yesterday, Hong Kong will raise the tax on high earners for the first time in 2 decades and scrap all property cooling measures. Hong Kong's economic growth was confirmed at 4.3% year-on-year in the fourth quarter of 2023, in line with market expectations, and up from a 4.1% rise in the previous period. It marked the strongest expansion since the fourth quarter of 2021, on the back of increased inbound tourism and private consumption. China's top legislative body passed a revised law on state secrets on Tuesday, as Beijing emphasises the importance of national security in policy making. The new law, which takes effect from May the 1st, expands its protections of state secrets to include a broad category of unclassified information known as work secrets. The new law codifies the party's management of secrets and emphasises confidentiality around emerging technologies such as artificial intelligence. Private property developer Country Garden, once China's largest developer by sales, is facing a winding up petition which has been filed in Hong Kong by a creditor. A firm called Evercredit Limited filed the case for non-payment of a loan worth 1.6 billion Hong Kong dollars. Country Garden, which defaulted on its overseas debt in October, says it will resolutely oppose the petition. On today's programme, I'm joined by Alex Frew McMillan, a freelance writer and Asian columnist for TheStreet.com, and Andrew Sullivan, founder of Asian Market Sense. And if you want to get in touch with any questions or comments, I'm sure you know the drill by now, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
US stocks were lower on Wednesday ahead of the release of key inflation data, and later today the Bureau of Economic Analysis will release January's personal consumption expenditures price index data, which is expected to show that prices rose 0.4% month on month in January, up from 0.2% in December. The S&P 500 pulled back 0.2% to 5,070. The Dow shed 23 points, or 0.1%, to 38,949. That's its third straight day of losses. The Nasdaq Composite fell 0.6% to 15,948. The yield on the US 10-year Treasury note eased 4 basis points to 4.27%, and the US dollar index rose 0.2% to a one-week high just below 104. And the Japanese yen printed at a high of the US dollar, printed at a high of 150.84 yen per dollar, with the year-to-date peak just above that at 150.88. The offshore yuan weakened towards 7.22 renminbi per dollar, sliding to its lowest levels in a week as persistent deflationary pressure, growth challenges and property sector woes in China continue to weigh on sentiment. Gold was 0.2% higher, around $2,033 an ounce, and Brent crude oil futures expiring in April fell 0.1% to $83.59 a barrel. And Bitcoin jumped above $60,000 on Wednesday to the highest level since November 2021, having traded above $64,000 earlier in the day. The cryptocurrency rose by 6.4% to hit $60,815, and that pushes the weekly gain to approximately 19%, and the increase for the month of February to about 43%. In Hong Kong, stocks of property developers rose after Financial Secretary Paul Chan scrapped Hong Kong's property cooling measures in a bid to bolster the sector. The Hang Seng Property Index jumped as much as 2.6% following the announcement, but then slipped from session highs to close 0.6% lower. New World Development shares surged as much as 9.8% before closing 2.9% higher. Henderson Land closed 3.8% higher. However, the broader equity market didn't react positively to the budget news, falling the most in 4 weeks. The Hang Seng Index declined 254 points. That's 1.5% to close the day at 16,537. Country Garden Services tumbled 6.5% after its affiliate Country Garden Holdings received a winding up petition from a creditor. On the mainland, the Shanghai Composite dropped 1.9% to 2,958 as investors await the National People's Congress that begins on March the 5th for signs of further policy support from authorities. And the CSI 2000 index, which is a gauge of small caps favoured by quants, dropped 6.8% Wednesday, the most since February the 5th, snapping 8 days of gains after Bloomberg reported that the CSRC has ordered quantitative trading firms to stop accepting new inflows and to phase out their existing products. And futures markets pointing to a decline of about 100 points for the Hang Seng, projected to open around 16,440. And you can get more details on the latest market movements in my daily newsletter, which you'll find at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Time to welcome our guests. We have with us Alex Frew McMillan, a freelance writer and Asia columnist for TheStreet.com. Morning, Alex.
Good morning, Peter.
And also with us is Andrew Sullivan, who is the founder of Asian Market Sense. Very good morning to you, Andrew.
Good morning.
Hong Kong's economy expected to grow 2.5% to 3.5% this year, Financial Secretary Paul Chan said on Wednesday as he announced measures to bolster a flagging property market and support the economy. In his budget speech, Mr. Chan forecast a consolidated deficit of 101.6 billion Hong Kong dollars for this financial year. That's almost double the estimate laid out a year ago, with fiscal reserves falling to 733 billion Hong Kong dollars by March the 31st. That's the lowest level in a decade. And the record government deficit has led to a slashing of the scale of one-off relief measures and new or raised taxes in the latest budget. Amongst the most notable budget measures announced yesterday is Hong Kong will raise the tax on high earners and scrap all property cooling measures. So the budget was themed advance with confidence, seize opportunities, strive for high quality developments. And the Financial Secretary put the focus very squarely on economic recovery and trying to bolster confidence in the economy as he plans to try and deepen innovation and technology. And also, he said, seek new markets and attract tourism and investment. So did he succeed, Alex? What's your sort of very high-level thoughts about what is done in the budget?
Well, I think probably the scrapping of the property cooling measures is the most far-reaching move that's been made and much needed, really. I mean, we can see that the property market is on its knees and transaction volumes are down massively. And of course, that's a huge source of government revenue, the stamp duties that and land sales that the government gets. So I think this is both necessary from the government's point of view and then also very necessary from the property market's point of view. They think that the change in income tax is only going to affect about 12,000 people total. And it's not a huge change. I mean, let's face it, moving from 15% to 16% for high earners is still an extremely low income tax by global standards. I mean, most of people in that category are getting taxed at 40% or higher in most Western countries. So it's still incredibly attractive to be a high income earner in Hong Kong, even after this change. And then I'm not sure how much effect the $1.1 billion allocated to mega events and tourism and monthly fireworks shows is going to have. But obviously they're keen to bring tourists back to the city as well. But I think that the change in property loan to value ratios that we've seen from the HKMA and so on should inject some new life into the property market.
Andrew, what are your sort of top level thoughts about the budget and the sort of difference overall that it's going to make to the economy?
I think Alex is right there on the tax. It affects very few people. It does allow the government to say that it's penalising, high income earners. Although we still have the problem that, Hong Kong's richest man doesn't pay any tax because he gets all his salary through dividends. So that it does maybe show that Hong Kong needs to reapproach, where it gets its revenues from. The reliance on property has shown to be lacking, and if the confidence in Hong Kong continues to dissipate and people decide they don't want to live here, then long-term wise we're going to have a problem. So that probably highlights a need to review. I think Alex is very right. I mean, tourism, we've never been known as a major tourism place. We've been known as an international city, an international finance city at that, and that title is being eroded by what's happening in China and the fact that the markets there aren't very good, and also by the fact that people are worried about the national security law, and I think as you mentioned this morning in your on your webpage, the fact that they've tightened it up for work secrets is just going to worry business people again about the risks of doing business in Hong Kong. On the property side, as I say, it's been the bedrock here because people have wanted to work here, because we've been an international finance centre. Those measures were supposed to stop it overheating, but that's not really the case. I mean, poor people in Hong Kong still can't afford a property here. It's an inflated asset, and the fact that we see people going over the border every weekend to spend their money in Shenzhen just shows you that rents and values are overrated here.
Let's dig into a couple of specific things then in the budget. First of all, the deficits. That was a standout, wasn't it? The deficit has ballooned to 101.6 billion Hong Kong dollars. That's going to leave, that's more than double what he was predicting this time a year ago. And it's going to leave the fiscal reserves at the lowest level in a decade of about 733 billion Hong Kong dollars. Alex, do these deficits matter, or are you worried that maybe Mr. Chan's losing control of Hong Kong's finances?
Well, I mean, we see in the United States that deficits don't seem to matter. I mean, they continue to run up a massive bill and not need to pay it because people have confidence that the US government's not going to default. Hong Kong was in the luxurious position of having surpluses for many, many years, so they're kind of eating into that because the Chinese economy has not been good, the Hong Kong economy has not been good. Effectively, Hong Kong has a strange system where high property prices are the tax on the wealthy that really funds much of the government, and salary taxes stay very low. And that's achieved through expensive land sales and through stamp duties that the government can recoup. So it is high property prices that are effectively the way of taxing, wealthy landowners or homeowners. So, we'll see if lifting the property cooling measures sparks transactions back to life, and that should then lead to stronger land sales, stronger stamp duties for the government, better flow of income. I think this is a temporary situation, and the Hong Kong economy is not doing great, but still posting some sort of meager growth, or the last quarter was pretty good. It's still growing. We're not in recession, and I expect that we will return to a surplus, perhaps not next year, but within a period of years.
I mean, he's predicting a budget loss of 48.1 billion next year, but of course, you've got to bear in mind that's after he's raised over 100 billion in through bonds. So, and Andrew, do you think he's losing control here, or is he just trying to do a sort of a balancing act? He's been forced into taking some measures that are going to increase the deficit and lower revenues, and at the same time, he doesn't want to damage the economy, and also he doesn't want to put the burden on people who maybe can't afford it.
Well, I think he's in a no-win situation, to be honest. I mean, we're still flogging the old model, and as Alex pointed out, we've historically relied on those high land sales to generate income, and that provided us with surpluses. But the world has moved on. I mean, we hear about a lot more people buying units in Shenzhen at a third the cost of what they can buy them for in Hong Kong, and then commuting into Hong Kong. So, Hong Kong is losing its historical revenue base, and realistically, it has to, I think, reevaluate whether that model still works. He mentioned about these raising bonds for new future development and saying that they're not going to be used to fund government expenditure. But the reality is there that demand for high-priced property units? I mean, of course, the government's saying it's going to provide more public housing, and that's obviously to meet the needs of most of the population. The real question is there demand from those high earners to come to Hong Kong and buy property here, or will they go to Singapore, which I think is likely, and we're seeing some top companies and executives move there. And equally, we're doing more business with Dubai. People will look at moving to Dubai where there's no tax for expats. So I think realistically, relying on high property values and taxes maybe is questionable and needs to be reviewed.
I mean, Alex, the government can't say it hasn't been warned, has it? Because advisors, tax experts have been saying for several years now, actually, that Hong Kong needs to broaden out its tax base because eventually this is going to become a problem. It sounds like we have hit the wall now, and this is where it is starting to become a big problem.
Well, as I said, I mean, let's see how land sales proceed from here. That would be a good yardstick. We didn't see any mention of capital gains taxes on property transactions, for instance, which is something that's been sort of floated and filtering around in the background. That wasn't mentioned. So they didn't really outline any sort of new methods of generating income for the government. So, I think land sales and stamp duties on equity transactions and property transactions will need to pick up. And I think they should as a result of scrapping the cooling measures. And then, let's not forget, I mean, the Chinese economy has been doing very poorly by its historic standards. So I think that's really been dragging Hong Kong's fortunes down. If and when the Chinese economy recovers, then Hong Kong should. But, in mainland, they've got to find some way of backstopping the completion risk on apartments and, guaranteeing that people are going to be able to put down deposits with confidence that their apartment will actually get built. I think that's the biggest issue that they've yet to really address in China if the economy there is going to recover.
Andrew, what do you make of these new tax measures on high-income earners, also some tax measures on luxury homes? I know it's small, and I know it only affects a small number of people, but could there be a worry that this is maybe the thin edge of a wedge? Once you start raising taxes, where does it end? And it also sort of rather sends out a signal, doesn't it? Because Hong Kong's been known for just having a very stable tax system for many, many years, which really hasn't changed. Taxes haven't gone up for a long time. Is there maybe some symbolism to this?
Well, I think it's an unfortunate symbolism, really. We're saying that we're open for business and we want to, attract top quality talent. And then we say, but if you do come here as top quality talent, we're going to tax you more than the rest of the population. So it's putting a burden on the people we're trying to attract, which is setting out a mixed signal, in my opinion. And we're competing globally for these people. They don't have to come to Hong Kong. And as Alex was saying, the Hong Kong economy and stock markets and IPOs aren't going well at the moment because of our connection and close links with China. So, it's not exactly a welcome mat. I mean, the government keeps telling people to tell good stories and to, and to promote Hong Kong, but it's very difficult to do based on the facts that we see daily in front of us.
Do you think it will put people off? Do you think it will either stop people coming here when they start to look at this, or maybe even people who are already here, make them think about moving elsewhere?
Well, I think it's a consideration. I mean, certainly if you're a banker and looking at the prospects here or going to Singapore or Dubai where the markets are much stronger, certainly Dubai where we're talking about, trying to attract a lot of Middle Eastern money to come here, then where would you be based? If you're doing Dubai business, do you want to be based in Hong Kong, attracting business from Dubai, or be in Dubai, sending business to Hong Kong? Those are, this is just one more against the checklist of maybe 10 items. This is one more negative.
And Alex, do you think even though maybe they're small, that it's not going to be that effective, is it? It's not really going to help that much to fill the fiscal hole that we're in.
Yeah, I mean, I was just looking at, I think Singapore's top tax rate is 22%. The top tax rate in the United States is 37%. In Europe, as I said, often 40% to 50%, depending on the country. So I think, Hong Kong increasing its income tax from 15% to 16% is not really that big of a deterrent for people. I mean, it still leaves Hong Kong's income tax at incredibly low levels. Whether this does plug the hole in the budget, I'm not sure that it will. I mean, I think it is a symbolic move, as you said, rather than really a move designed to balance the budget.
And the thing is that the deficit is still going to be big next year. Although he says 50 billion, that's after the issuance of bonds of about 120 billion. So we're still going to actually have another big deficit next year that he's got to try and fill that hole with. Yes.
I mean, equity markets in Hong Kong have performed horribly for 4 years in a row now. The economy has been experiencing lackluster growth. I think those are the two things that really need to change for the Hong Kong government's finances to improve. And the equity market will likely recover before the economy, front running it a little bit. I think when US interest rates do start to come down, that should be quite a boost. And that's the timing of that is being pushed back because the U.S. economy continues to be relatively strong. So, when we're going to get that kind of help, since we've got imported U.S. interest rates, it's being pushed back, meaning that the equity rally in Hong Kong that I'd expected to start at the beginning of this year really has not come yet. So we need to continue to wait for that to happen.
Andrew, one other tax that Mr. Chan announced, which I found a little bit odd. This was reviving basically the hotel tax, which has been waived since 2008. It's going to be 3%. It's going to generate income of about 1.1 billion. But it seems to go in contrast with the idea of then spending $1 billion to try and get tourists to come into Hong Kong. But having got them here, you're going to charge them more on hotels, which already mainland tourists think are way overvalued and way too expensive compared to what they pay in, say, Shenzhen.
I think you're right. I mean, yes, this is it's a very small tax revenue generator. It sends again. It's the government sending out a mixed signal. We want you to come basically because we want to take as much money off you as possible, which is not generally a good tourism slogan to be promoting. And I think it's I can see why the government's doing it, because certainly the hotel bookings in Hong Kong have risen significantly. They were high during COVID, but a lot of that was that Hong Kong was being used as a transition base by a lot of Chinese people who couldn't fly back directly to China.
Alex, what are your thoughts on that? It's slightly odd, isn't it? When you're trying to encourage tourists to come here, you're spending $1 billion on attracting them, but then you're going to charge them more when they stay here.
Yeah, I don't typically like consumption taxes and hotel taxes. I think it's just the kind of thing that the government thinks it can get away with, and it'll be just slapped onto your bill at the end of your stay, and people, won't notice, or it's not going to discourage people from coming to stay. But yes, I mean, it's definitely a mixed message saying we're going to spend $1
billion Hong Kong dollars
to try to encourage people to come to the city, and then we're going to discourage you by making it more expensive to stay. We've already seen a lot of mainland visitors sort of downshift in their spending and a movement in China towards more budget type experiences. I know whenever I drive along the Kennedy Town waterfront, there's just a huge crowd of people looking to take free pictures of the sunset and of the waterfront there. That's a free experience, essentially. Go and get a selfie in front of the waterfront. And it seems that mainland tourists have been sort of moving to those kinds of budget experiences, cheaper experiences. So I don't think a hotel tax is really going to encourage more of that kind of traveller who's trying to do things on a shoestring budget.
And do you think mega events and things like monthly firework displays will attract those tourists?
I'm not sure about the monthly firework displays. I mean, that seems irregular enough that I'm not sure people are going to time their trip to coincide specifically with a fireworks show. So, yeah, that seems like an odd decision. But mega events, I mean, certainly do bring people. We've seen economists trying to calculate the economic effect of a Taylor Swift concert because it brings so many people to any city at one point for that event. So mega events do bring people into the city and raise the city's profile. If it's a sporting event, it gets coverage and just sort of reaffirms the fact that Hong Kong's open for business again. So I think the mega events I think they pay for themselves when you consider the amount of support that the government lends to them.
Andrew, what are your thoughts?
Well, I'm slightly worried by that because I think, yes, certainly you look in Australia, people travel to the major cities for these events. But in Hong Kong, I don't think anybody's, going to fly specifically, to Hong Kong for a Taylor Swift event, in so much as they would, from surrounding states in the US. It's a slightly different matrix here. And as Alex was saying earlier, I mean, the tourists that we are attracting from the mainland aren't the rich tourists that used to come here to buy a Rolex watch because they were worried about fakes in China. That boat has gone. The tourists coming here are the package tours again, low spending, and again. I think those tourists are going to be put off by the extra 3% per day on your hotel bill because that's eats into their budget, which isn't great to start with. And again, mega events, in the past, the mega events that Hong Kong has done well and been known for are things like, the Credit Suisse investor conference that was tacked on with the Hong Kong Sevens. And that didn't require the government to invest a huge amount of money. I think the trouble is now that we've got government thinking that it's a tourist agency rather than allowing the private sector to get on with tourism and the government to get on with the idea of running the country. And I think when you get governments trying to force tourism, it usually ends up badly with a waste of money.
Yep, very good point. Now, one of the problems with the deficit is that Paul Chan's had to take a more targeted approach to spending. Probably the most high-profile victim is his ditch consumption vouchers for residents this year. That cost the public coffers 33 billion Hong Kong dollars last year. Alex, was that the right decision, do you think, to end consumption vouchers?
I mean, obviously, they were a popular move with rank and file citizens, but they didn't particularly make sense as a way of stimulating an economy. I think there are better ways of promoting growth in a city that a government should engage in other than freebies. The rates concession has been trimmed in consecutive years, so now it's just 1 quarter and $1,000 per property, a maximum. So that's also declined, and they've said that I'm not really sure what they mean by reviewing the $2 scheme on public transportation, but not changing it, which is what they've said that they're going to do. That seems like a strange thing to say. So why review it if you're not going to change it? Yeah, I mean, fewer freebies is the bottom line. And I think that does make sense from the government's point of view.
Andrew, what are your thoughts on that?
Well, I think, the consumption vouchers, the trouble was, we're saying that we're a rich economy, but they were given to everybody rather than, necessarily being more targeted. And I think they would have been far more effective if there had been a means tested. And it's interesting to note that, we have no unemployment benefit here. We have mainly means tested benefits. So the government knows how to do means testing, and therefore I think it could have targeted the spending of that money a lot better and probably got a better return on its money by using some of its existing systems rather than this carte blanche, good feeling factor that it indulged in. And I agree with Alex. I mean, the $2 travel scheme for those over 60, remember, these are people that are generally not working or on low incomes. What are you going to review? Are you going to put that up and hurt a proportion of the society that really probably relies on that more than anything else? So, again, the government's sending out very mixed signals, and a lot of it doesn't seem to be well thought out at this stage.
Now, Alex, the other thing the government talked about was issuing bonds, 95 billion to 135 billion annually over the next 5 years to drive some of these big infrastructure projects. But it does appear that the Lantau Tomorrow project, which was Carrie Lam's pet scheme, which barely got a mention last year's budget, has been quietly dropped now altogether, doesn't it?
Well, they do say that they're going to still build these, artificial islands off Lantau, and that's, going to be pushed back, but definitely going to go ahead. I wonder if that won't quietly be dropped. It seems that the northern metropolis is the first focus. I think Hong Kong has an opportunity to become one of the first economies, first cities to try to focus, on not just pavementing and concreting everything over and calling that amazing progress, and to really, try to make its economy as efficient as possible, as high functioning as possible, as services oriented as possible, and move away from the idea that the only way you get growth is by, constructing multi-story towers everywhere. I think, we need to look at what we consider a measure of success for an economy. GDP growth has been the yardstick, really. But I think efficiency, productivity gains, happiness gains, satisfaction gains are all things that should be measured as well. Purely looking at property development or infrastructure development as a future, success, I think is short-sighted.
Andrew, what are your thoughts on that? There's clearly got to be a lot of infrastructure spending, hasn't there, through bond issuance? That seems to be the government's plan, although there are calls that this should be specifically targeted, that each bond should be designated a project so it's very clear what exactly it is it's financing.
Well, yes, and it'll be interesting to see how many of them are green bonds, considering that the financial secretary wants us to become a centre for green financing. Is he actually going to sort of live up to his own hype and issue these bonds and then do things that are green with them? So it'll be very interesting. But I agree with Alex. I mean, I think the idea, I was going to say allowing those little islands to sink off Lantau would probably be a good idea. Or if you're going to build them up, make them into little tourist homes so that people can enjoy the environment. But the reality was these were big, broad brush schemes aimed to try and give confidence to the property sector, aimed to try and meet the needs of Hong Kong. I mean, realistically, we don't have a land shortage for housing. What we have a problem with is we want to keep the land values high so the government benefits, the developers benefit, the existing owners benefit, but it doesn't help the new people looking to come into the system. But going back to the bonds issue, yes, I mean, I agree with Alex. I mean, we don't want to just be concreting. I mean, if we're going to promote ourselves as a tourism centre, we should be talking about, the good walks, the wonderful beaches, the lovely venues that we have here, rather than, a new Sha-Tin link somewhere. It's going to be very difficult, I think, for the government to really, square this going forwards, just because Hong Kong has a lot of unique features, but all those historic features really are coming unravelled now, and we need a new blueprint.
Is the Northern Metropolis, isn't this another example of really the government intervening where it doesn't really need to? I mean, if there was a real need to have this metropolis on the border with Shenzhen, businesses would be going there already. They would be setting up in that area. Shouldn't this all be left to the private sector and the markets to decide if we need this?
Well, we already have the science park up there, which is, attracting its own demand there. But I agree with you. I mean, this, I think, really is Hong Kong trying to ingratiate itself into China and show Beijing that we are looking to try and link ourselves into the Greater Bay Area, which I don't think, again, it's the government forcing issues, and it goes against Hong Kong's historical laissez-faire attitude of allowing business to develop business, and it will just administrate it, rather than the government telling business what to do, which as in tourism just doesn't really work. And I think the fact that we're seeing problems in the mainland economy just really goes to show that the command economy structure doesn't work in the long term.
Alex, what are your thoughts on that? Are we moving away from our sort of laissez-faire economy, which has served us very well for a long time, and now trying to have the government really dictate where businesses ought to locate and how they ought to be doing?
Yeah, I think, the government could make it easier to redevelop parts of the existing city and, make it easier to convert property use types from industrial, for instance, into commercial and residential. Kwun Tong has really transitioned pretty successfully into a second business hub with a lot of offices, although vacancies are pretty high. So I think that has been quite a successful redevelopment of an area that was really like the first industrial neighborhood in Hong Kong. That's been, gradually shifted to being a commercial area. And I think that's quite a successful approach. But I think the government has got it in its head that it needs to come up with grand schemes and, command economy style approaches. I don't think that necessarily works. And designating something a northern metropolis doesn't make it a successful metropolis. It's just a catchy term.
Andrew, what do you make of the market reaction overall? I mean, initially property stocks jumped on the removing the property cooling measures, but it didn't seem to last very long, did it? A lot of those property companies sort of run out of steam as the day went on, and the broader market sank 1.5%. What are your thoughts on the reaction?
Well, I mean, we've seen the property stocks being shorted quite significantly on a daily basis. So to see an initial pop there, as Alex was saying, the hope is that this will generate more sales for them. So I think you saw a lot of short covering there, off the bat, so to speak. But then the big issue yesterday was really this winding up petition against Country Garden, which puts again another sword of Damocles over the Chinese property developers and the property interest. And again, as Alex was saying earlier, the government's really got to do something in China to try and restore confidence there, which is just lacking. And I think, it's about a year since there were first questions about Country Garden. It's been 3 years since we questioned Evergrande. The fact is that the government in those 3 years have not done anything to really, shore up that market. I think is a real worry for investors. And I think increasingly we're likely to see a domino effect to other developers with their offshore funding problems that continues to undermine it. So I think there's going to be a lot of difficulty there. I think the reaction to the budget itself was probably minimal. There was not a lot there that was going to drive people with excitement onto the streets and get their wallets out.
How big a problem is this Country Garden petition? Presumably Country Garden's going to try and do some negotiations first, isn't it, with its creditors and come up with a plan which could drag this out for quite a long time.
Well, I think the important thing about the Country Garden one was this was Kingboard Chemicals lending them money. So this was a friendly company coming in to help them. And I think Beijing was trying to structure it that it would try and get a lot of these companies to help each others out with these sort of loan deals. The fact now that Kingboard is now calling that loan in and is disappointed that it hasn't been repaid just shows you that was never going to be a solution. And I think that the likelihood is that more and more creditors will realise that they are unlikely to get their money back by waiting, and therefore they will be more aggressive in these petitions going forward.
Alex, how big a problem is Country Garden, a winding up petition for Country Garden?
Well, it does effectively force them to negotiate perhaps a little more urgently with creditors. I think investors do generally think that Country Garden will survive, unlike Evergrande. So, at the moment, it doesn't appear likely that they will be forced into complete liquidation. But you never know. It really requires some complex negotiations with creditors who are going to be getting cents back on the dollar. But, the question is how many cents. So we'll see where this goes. I don't think this is, necessarily the beginning of the end of Country Garden, but perhaps the beginning of the need to come up with a sensible package that, protects the rights of small creditors. So perhaps smaller creditors, as represented by Evercredit, feel that they weren't really being dealt with sensibly, and doing this to protect their own interests. But yeah, I think that this is going to roll onwards. So it's the beginning of an interesting new development. But property stocks in China have been challenged. They performed poorly yesterday, as did, general consumption stocks. Li-Ning and Anta Sports were some of the biggest decliners, Trip.com. So, and then the Hong Kong property stocks, as you've pointed out, halved their gains during the day. So we saw the Hong Kong budget's effect, kind of fizzle out within a day.
Well, thank you both very much for your thoughts this morning. You heard that Alex Frew McMillan, who is a freelance writer and Asia columnist for TheStreet.com, and Andrew Sullivan, who is founder of Asian Market Sense.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening to Money Talk this morning. Do please take a look at my newsletter at peterlewismoneytalk.substack.com for more information on developments during the Asian trading day. I'll be back tomorrow when I'll be joined by Francis Lund, the CEO of GEO Securities, and Tim Huxley, Chairman of Mandarin Shipping. And with a view from Australia is Toby Lawson, the CEO at Staten Partners. Have a great day.
Money Talk.